Welcome back to Be Rich. My good friend Shashwat Swaminathan is here. He's also my nephew, and we had a talk. We wanted to talk about Amazon. We came across an interesting piece that said that Amazon is a value buy today. Actually, if you go by value metrics, Amazon is way too costly. The profits don't justify the price at which it is today. And if I'm sure last quarter it made a loss also. And inflation is going to affect its sales, and the amount of sales that are done in that store in that website is also going to come down. But the article was written in the Financial Times by a man whom I respect, who runs a premium column there. So I asked my nephew Shashwat Swaminathan to do a deep dive into it and tell us why Amazon is a good buy at this stage. According to Robert Armstrong, why is it a good buy? It's not I am not buying. I am not asking you to buy, but we are taking a look at it. We want to look at a contrarian view also. Go ahead, Shashwat.
So, Amazon, I'll just give you the data points for Amazon. The price as of today is $114.81. The 52-week high is $188, and the EPS is $2 per share, and the price to earnings ratio is 56. So, in the past 12 months, their operating profit for this is Robert Armstrong's key argument for why Amazon might be a value buy. He says that Amazon Web Services (AWS) has in the past 12 months has given an operating profit of $21 billion, and taxing it at 21%, the net income you'd get is around about $16.5 billion. So Amazon Web Services in its first quarter of 2022 grew by 36.5%, and the quarter before that it grew by 30%, 30 something odd percent. So that's a growth company. So Amazon's biggest wing is a growth company, and if you look at the valuation, so he takes Amazon Web Services as a separate entity. He looks at the market cap of Amazon. So Amazon's market cap at its peak was $1.9 trillion. Now it's teetering at about $1.2 trillion. So he says let's take Amazon Web Services as a separate entity and value it as a separate entity. So for Amazon Web Services, he says that if you tax the past 12 months of operating income at 21%, you get $16.5 billion. And now let's look at a company which is comparable to Amazon in terms of Amazon Web Services in terms of size and the business. So he takes Salesforce as a company to compare with, and he says that Salesforce, which are much more sober growth and lesser profit margins and lesser net income, is valued at 165 price to earnings TTM. So he says, let's say Amazon is valued at, or rather Amazon Web Services alone is valued at a PE of 45, then it should be worth $740 billion in and of itself, Amazon Web Services as a wing. So that is his key argument to why Amazon is, so the Amazon's market cap is $1.2 trillion and $740 billion comes from web services alone. So now coming to retail, which most people are familiar with. Most people aren't familiar with the back-end work which goes on with Amazon Cloud, which gives it most of its valuation per se. But if you come to Amazon retail, Robert Armstrong asks you this. He says whether Amazon retail is worth $300 odd billion. So he compares it to Walmart, which is worth, its market cap is $300 odd billion, and he looks at Amazon in comparison, and he says yes, Walmart has thicker margins, and Amazon retail is currently making a loss. So he says that what investors see in Amazon, or this is the thesis, this is a contrarian view, contrarian to a value investor, what he says is that people think that they look at Amazon in the long-term perspective. They're not into short-term profits. So whatever loss Amazon has made, $3.8 billion in the past quarter, is not something which investors are giving too much weight to. Yes, it has slid from 1.9 trillion to 1.2 trillion. But he says, let's look at Amazon as a growth company and let's see where it will stand in a few years. And he says that the thesis for the retail business to be valued at $300 odd billion is if Amazon stabilizes and stops investing more and starts taking out more. So it starts to become a cash cow rather than a growing company. So according to the BCG matrix, right now it's a star. But now he's saying that it will slowly transition into a cash cow where you have stable growth, in the sense very minimal growth. Walmart has had very minimal single-digit growth numbers in the past few quarters, and he says that Amazon will get to that point soon. And initially he said that Amazon retail grew much faster than Walmart retail until very recently, when during the post-COVID boom in e-commerce and consumers purchasing from Amazon rather than in-person stores. That boom really pushed up Amazon retail services. But what Armstrong says is, even if we say that Amazon in a few years will get to Walmart's position of higher margins and becoming a cash cow, he says that right now it looks pretty good, or at least if not a value buy, it looks like fair value, is what Robert Armstrong argues. And he also says that even if you look at multiple of, and even Warren Buffett in one of his interviews a few years back said that he missed the bus with Amazon. So the prince of value investing, if you will, says that he missed the bus with Amazon. And so that's Robert Armstrong's argument. So these are the questions I have for you. What do you see as the future of Amazon Web Services with Azure, with Google, and all these other cloud, with Dell?
Okay, Amazon has a huge market advantage. He is already the leader. Azure is number 2 in the game, but Amazon is the leader. And more than huge corporate space, which Amazon will do well in anyway. If I were looking to buy at a cloud, or which my wife would, your aunt will make the decision to buy cloud, it will be Amazon.
Why?
Because she already has a Prime account.
Okay.
She orders from Amazon. Every day she sees Amazon, so she'll buy that.
So it's like an Apple in and of itself.
It's an ecosystem. He owns the ecosystem in retail.
Yeah.
And this retail moves into small office, home office. He will own the small office, home office. The only competition is going to come from Google, but Google is way behind Amazon in cloud services. This is one advantage. Second, in Prime, he has a huge moat that is not being considered here. Yesterday I argued, he has increased prices in US by 17, in Germany by 30, in France by 43, and in Britain by 20%. And Italy and Spain are to follow. So he is going to, in Prime, he has got a moat and a big value. I don't think he's talking about Prime. I don't know where he is valuing Prime. He is not valuing Prime. He is also not valuing a possibility that one day Amazon will start to charge for Alexa.
The AI.
The AI, right? Like iTunes is being charged. If I want to buy something, I have to go and buy in iTunes. Whereas I don't have to, I am not paying something for anything. The music is free with Prime and with Prime membership today.
Yeah.
But it's not going to be. That's what by increasing prices, he has shown it's not free. He has the levers to increase prices.
Right.
Another big advantage he has, which is not showing up in numbers today, is the papers. As years go by, the book ecosystem is going to move to e-books. Kindle has a first mover advantage.
Yes.
Right? Others may have e-readers. I am not going to go to Flipkart and buy a Walmart e-reader anymore. I am a very avid consumer of books. I still find it difficult to read in Kindle. I still buy physical books. But your generation has stopped. You read more of online books. So you are going to move away from printed books into e-books. And he is going to smash you there. Nobody is going to compete with him. Audiobooks. Others have done audiobooks. I had to go through YouTube to bring audiobooks. Now he has an Audible service, which is a subscription service. He gives you a book free. It's in very nascent stage. He may be losing money at this time, but he's building an ecosystem.
Yeah.
In our own household, I have 2 Audible accounts. My sister has an Audible account. My niece has an Audible account. My brother has an Audible account.
Yeah.
In the same household. We all live in a joint family. So, and we keep sharing books. So, but we have 1, 2, 3, 4 into 2, 8 memberships. We have an India membership separately. We have an American membership separately.
Yeah.
And it is pittance for me, right? It's not yet penetrated, but it will.
Yeah.
So he is already going to dominate video.
Yeah.
He is going to dominate. He is going to dominate video. He is going to dominate voice in print. He is going to be in AI, and he is already bidding for the English Premier League.
Yeah.
Right. He has the cash to pay.
Yeah.
He can bid the IPL, the Indian IPL.
Yeah.
So we are talking about a behemoth who owns an ecosystem. So I won't value him only on web. What I am now worried about is how much the Fed will tighten.
Okay.
Based on that, I am pushing my purchase. But Amazon at this price, if I'm sure that he is going to stop at 4 or 3.5 interest rate, I will buy. But if I am not sure about 3. I think he does a Volcker on me, I am going to lose money on that.
Yeah.
In the short term, that is 114 can become 75.
Yeah.
Actually, it should matter to me. But since it's in dollars, the pain will be slightly more. But I'm definitely looking at.
The pain will be slightly more.
more for me, in the sense because I'm going to lose psychologically I'm a multiple of 80.
Okay.
So I'm losing 50 per share. I'm losing 15 to 80 per share.
But you have a buffer in terms of the exchange rate.
Yeah, but my exchange rate is going to, how much it will fall from here, all that is up, will stop me from doing it today. Because I would like to, I feel that he may have to tighten much more than what he is doing. And Russia cutting gas supplies means crude will go up further.
Yeah.
So he may have to do more. That is my only
So
cost.
shipping costs will go up.
Shipping cost will go up. All this is a matter of overall inflation may not come down quickly as what the market is expecting. The market is expecting a perfect landing. I am not expecting a perfect landing. I may be wrong. So if it comes to 75, I'll buy it today. At 114, I'll think about it, but I'll buy. This is what I look at. This is what I look at Amazon as a company.
Right. So what do you think is the future of Amazon's retail business?
The future is going to be digital. He's already got entrenched himself in India. It's going to be very difficult to dislodge him from India.
The interesting thing is 60% of his revenues comes from only North America.
So that is what I'm saying. There is an Alibaba in China, but there is no Alibaba in India.
Right.
So it is going to be, and he has already, people say that Reliance is in. Reliance sucks in consumer service so far, whatever it says.
Yeah.
Tatas are very slow, it's a very slow process. They are very bureaucratic, it will take 15 years before Tatas get going. So I think he has a clear field in India and he will continue to dominate India.
Okay.
So his dependence without sacrificing turnover will come down to about 30% in Amazon, and he'll be able to, and he has lesser carrying cost. He has a marketplace model at times. So people come and sell on Amazon,
right,
whereas Walmart has a carrying cost.
Okay.
So I think his supply chain would be better. His management of warehouses will be better. So Walmart has to learn from him rather than him learning from Walmart. And the cloud is a killer advantage. That is, you can value him like Microsoft, you can value him like Netflix.
Yeah.
You can also look at EA.
Like Google.
Yeah, he has got too many moonshots.
Yeah, that's what Robert Armstrong says. It's a black box.
It's a black box.
It's very tough to, unless you are inside Amazon, it's very tough to know what's going on.
Yes.
And finally, this question I think you've almost already answered, but just to sum up, is Amazon valuable currently at its price? What do you think?
It is value, but the macros are worrying me.
So it's somewhere around fair value, but you're not sure yet.
Sure, I don't know the macros.
Yeah.
If the macros are stable, I'll buy Amazon today.
So that would mean that you need a greater margin of safety.
I would prefer a greater margin of safety sitting in India.
Right.
If I were sitting in US, I would have bought this.
But what's the difference between you sitting in India and you sitting in
Because psychologically, I'm still marking myself in rupees.
So it's a psychological.
It's a psychological thing. If I lose $50, I'm not losing $50. I'm losing 50 into 80.
Yeah.
That's $40,000.
Yeah.
50 into 80 is how much? $4,000. $4,000 per share is a lot of money for an Indian, psychologically, though it won't affect me financially.
Yeah. So that's all I have for you today.
Thank you. Thank you very much. Thank you for watching Be Rich. If you like this video, kindly subscribe to our channel and turn on the bell notification. Consider sharing this episode with your friends and relatives. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.